Welcome to the Daily Update. This is Being Prepared Monday, February 28th, where we'll look at the action in the market for today and then see how things look for Tuesday, March 1st. And happy March. When March comes around, it feels a little bit more like spring. I'm a big baseball fan. I start following spring training and I'm getting ready for the baseball season. Of course, I'm from Seattle, so the Seattle Mariners are my team. They did pretty good last year. We'll see what this year has in store for them. Regardless, let's look at how things are for Tuesday. And just to give you a little bit of warning right off the bat, I've had a lot of new people that are starting to watch these videos. Even though I'm from Seattle, I am currently residing in Belarus, which is probably a country you've heard a lot about in the news lately as it pertains to the Russia-Ukraine situation. Right now, I am safe. It is peaceful where I'm at. I still have internet connectivity. However, this is a very fluid situation and it could change. And if suddenly I'm not able to prepare videos, it might mean that I don't have internet or I'm trying to make my way to a different location. So just be aware of that. But personally, I'm fine right now. I've got a lot of friends back in the US who don't think so, but we just we make decisions based on the situation, and that can change at any time. So, okay, so what happened on Monday? It really was a lot calmer than you might have thought it would be. We have a lot of big things going on right now. Of course, the sentiment that I can see is that most Americans and Europeans are behind Ukraine. Russia had planned on just walking into Ukraine as liberators, and it didn't really happen that way. The Ukrainians started fighting back, and things have become more complicated. It might drift over into other countries. Belarus may, they've said that they're on the side of Russia, which is part of the problem for me personally, and they might try to go in and take Kiev, however you want to say that. Kiev, forgive me if I'm saying that wrong. I am one of the ignorant Westerners who probably say it the wrong way. And there have been more sanctions. The SWIFT sanctions have been enacted, which right now does affect me personally, but it's the right thing to do to support Ukraine and to not support Russia. But the US continues to buy oil from Russia. So that's kind of a real contradiction that we're seeing right now and is really having an impact on oil prices. Well, as we were watching things, and if you ever want to watch this, I go to investing.com. It's a free site. You don't even have to, you can set up an account, but you don't have to. And they have all of the world indexes listed there. I have a video that talks about this on my channel. And you can just watch them in real time. It may not be the best that's out there, but it updates without me having to hit the refresh screen, and it's free. And so about 3 o'clock in the afternoon, West Coast time, or about 6 p.m. East Coast time, that's when the S&P futures and other futures start trading again. And so I start watching that right away. And there was a pretty big gap down from the close on Friday to the open Sunday evening. There was about a 2% decline. We flittered around that 2% for a while, and we stayed right at about 1.5% down overnight. But things started to improve slightly as we got ready to go in the US on Monday. We did have a gap lower right at the open, and there was initial selling. And that probably is not surprising, but I was a little, hearkened. I was a little pleasantly surprised that the selling wasn't as bad as it could have been. We still are right at a tipping point, one of many that we've been hitting lately. We're starting a new month. There are new pivot levels that are drawn, but we're right at that point and the market is rather indecisive right now. So there was initial selling off the bat, which could be expected. And prices, it was a very technical day as far as the pivot levels. Prices chopped around the pivot points for the day. We were able to recover and we got right back up to that unchanged level, which when we're down, that is a resistance level. It looked like there was a couple of tries to make it through the unchanged level, but then selling resumed and we went all the way down to S1. It was a little bit more positive going into the close because we saw some late day buying occur. We ended up being down 0.25%. So we were down for the day, but it was a little bit more positive than that. Some of the other indexes that I'll go through were actually positive on the day. Volume was above average. And what we're looking at now are that the technicals remain negative, but they are showing some signs of improvement. We still have earnings that are coming out, inflation and interest rates. We saw a big drop in interest rates with the treasuries on Monday. And of course, the geopolitical concerns, which the world is focused on right now. Are things going to calm down? Are they getting ready to escalate? We don't really know at this point. Is NATO going to become more involved? These are all variables right now that could send things, at least geopolitically, one way or the other. Oh, and then another thing that Putin did over the weekend is he heightened the military or his nuclear level, which produced not, I don't think it happened in the US. We're at DEFCON 3 in the US, but Europe is at DEFCON 2, which means US troops in Europe, that means they have to be ready to move in 6 hours. And we haven't been at DEFCON 2 since the Cuban Missile Crisis in 1962. And being a historian and a history teacher, I've studied that a lot. And that was a really scary time. We could be near something like that that's actually starting to unfold in Europe. We don't know. There's more questions than answers right now. They're wondering, is there something wrong with Putin? Does he have a brain tumor? There's been rumors about that. The plan that he seems to be enacting, it hasn't worked out the way that we thought it would. Does he have a different plan that we are not really able to put together right now? Just a lot of different things. And everybody is an expert on this, of course, and will offer their opinions, but we have to look for hardcore facts and base things on what are actually happening. We can speculate, but we also have to realize that we could be wrong about that speculation at any time. Getting back to the market, you can tell where I've been focused the last few days. It's geopolitical because this is involving myself and my family, and things might change very quickly. But from what I can see, even with the slightly down day on Monday, the S&P has stabilized a bit. We had those strong up days on Thursday and Friday. Even though we had a bit of a down day, it's given the indicators a little bit of time to catch up with the more positive backdrop. It's still negative, but things look to be improving, and we are still in the middle of that short-term range. It's kind of turning more into an intermediate term range. Remember, my definition, short-term is days to weeks, and intermediate term is weeks to months. Well, if this continues on, this might be an intermediate term range. Russia, Ukraine dominate the news. Canada is still in there too, but Canada's been offering a lot of support to Ukraine. It seems like there's been an outpouring of support, and that's wonderful. And I think when the world can unite kind of in a similar way to how it did in World War II, nobody wants war. Nobody, well, I shouldn't say nobody, but sane, rational, loving people don't want war. And we would like this to be handled diplomatically. But unfortunately, there comes a time when people have to stand and fight. And we're trying to see just The Ukrainians are already fighting. Now, is that going to bleed off into other areas? We're still waiting to see how that goes. But the technicals are improving, and I'll go through the charts and kind of show that to you. Economic reports that came out Monday, there was a list, but they weren't real influential. They didn't really have much of an impact. We continue to be overvalued. And again, I want to do a video talking about the valuation of the market, and it's the beginning of a new month, and when these charts update, I really hope to be able to do that. But please understand, I'm a bit distracted right now, but doing these videos helps keep me sane, if you will, even though I talk about an insane thing like the stock market. The ADX, our trend, continues to be negative, and with the down day, the bias was negative. The momentum continues to be negative, but it could be improving. But the ADX it's picking that up a little bit, but not a lot right now. Okay, so let's look at what happened here. We did show a little bit more fear on Monday. The previous reading was at 33. We've now dropped to 24. We want to see if we get over into this area. That could signal more of a stronger bottom in prices. And then historically, just to give you some perspective, we have dropped a little bit. Where we start to really take notice is when we go below 20. We're not there yet. Then as far as the VIX, it did increase with the down day on Monday based on a closing basis, and it did increase with the bar. But if you can see this, we closed closer to the bottom of the daily bar because we saw some late day buying. So there's a lot more internally that happened than just what we're seeing based on the bar chart from one day to the next. And then the VIX, it declined ever so slightly and closed near the low, but it did increase on a closing basis. So it's kind of half full, half empty kind of a thing here. The Ulcer Index, even though we were pretty much sideways with a little bit downward movement, the Ulcer Index is continuing to advance. That's fear that's in the market. And this is just the longer term view of that chart to give some perspective. As far as our sectors, since we had a down day, I sort these according to what declined. And real estate, yeah, interest rates going up, house prices really high. The real estate sector is showing continued weakness. The financial sector and staples declined. Those are more value plays. And the energy, of course, with oil bouncing all over the place, it had a good up day. So we were kind of half and half as far as our sectors. Tech was pretty much unchanged, didn't really move all that much. It was down slightly. And then looking overall, energy continues to outperform since the all-time high. Discretionary has now gone back into last place. And then we have the communication services and with our Chernobyl green, and then real estate, and then tech. So this just gives you an idea of what's happening internally inside the market. The BDI declined slightly on Monday, and then the CRB actually, it had an increase. It was up 1.75%. So this upward movement that we've been seeing since the 2020 lows is still very, very strong right now, which is also feeding into the inflation battle. As far as the Fed watch, I've taken away those other charts. I've rehashed that enough now. We're just looking at this. We have what, 15 days now until 15, 16 days until the Fed starts their meeting, and things are pretty comfortable. They switch from half to 3/4, and now it's almost an 89% chance that it's going to be a quarter to a half. And then here's the chart showing just that as well, where the quarter to half, it's decreasing a little bit, and the half to 3/4 actually is showing a bit of an increase, which is strange. I don't know if they updated this chart. on here. Our technical alerts, they were mostly positive. There really weren't any alerts that were triggered for the S&P. It was in the other markets. Utilities had a MACD bullish crossover, as did healthcare. That's interesting. The Dow dropped below 34,000. Canada, which has been having some problems, dropped below 21,000. The Nasdaq went below 13.6, but then it went back above 13.7 and got to 13.8. It benefited from some of that late day buying. Energy has a BPI that crossed above 80. That means it's in overbought territory. And the industrials also had a bullish MACD crossover. And then energy sets a new 4-year high. And then I'll show you the oil chart here in just a moment. Intraday, this is where we were at on Monday. We did gap a little bit lower, right onto the pivot level. We saw some initial selling. This is where it looked like, okay, what's going to happen now? Are we going to see what we saw on Friday? Initial selling and then poof, taking things higher. Well, we got back up to this unchanged level. That's the dotted line. Tried to peek our head through that a little bit, but then prices went back down, drifted sideways, and went right down to S1. That's what I say by a technical day. Do you think these lines are important? And the cool thing is these lines are on the chart before the market even opens. Well, we were able to establish some kind of a little base right here. And then this is the late day buying that we saw and ended up being down 0.24% on the day. We are right above the pivot right now for Tuesday. This shows you the bar chart. I didn't really change anything on here. We're right at about the new monthly pivot level. Above the pivot is positive, below the pivot is negative. We're just a little bit below the new pivot for March. We are down 8.81%, so we are in pullback territory. We're below 10% now. So this is not necessarily a freak out move. The impressive comeback that we saw last week, even with the decline slightly on Monday, is still pretty impressive and is still helping things to look a little more positive. They're still negative, but right now things could be turning more positive. Growth actually saw a bit of an advance and value saw a bit of a decline on Monday. And then this just compares the two indexes where growth overall has really been declining, even with the little advance that it saw. But we're seeing that shift still continue to take place. Now, we saw that in 2021 as well, only to ultimately have growth come roaring back and take over. Is that what's going to happen now? We don't know at this point. It's something that we are watching for. Here is the Nasdaq 100 against the S&P. With the late day buying, the Nasdaq 100 actually outperformed the S&P. As far as our trend, this is the ADX. It's still negative and we're still trending and it's above 20, but look how buying power decreased on Monday. We did see a bit of a decrease in, selling pressure decreased. We also saw a bit of a decrease in buying power, but this could be taken as a little bit more positive. Then the mass index, we're still waiting on that. Both triggers have been initiated. It's on the books right now, and we're waiting to see is something big going to happen. We don't know yet. That you can make a case for either side that we're going to be able to shoot higher from here, or things are going to break down from here. Then the Arun, this is also a little bit more positive. After Friday, it didn't really pick up much of the two strong days that we had. Well, even with Monday's decline, it shows that the selling pressure has decreased slightly and the buying power has increased slightly. So it's starting to pick that up a little bit. It's not positive yet, but this could be improving. The oscillator is still negative, but is showing some signs of improvement. No change with the decision point scorecard here. We're still down overall. I focus mostly on the PMO signals. As far as breadth, we saw, because of the down day, we saw things negative based on price and volume. We did decline a little bit, but we're still above the moving average. We are more negative based on volume because we are showing a negative divergence between price. The AD ratio, because we had a down day, did decline slightly. New highs, new lows. We had some new highs generated on Monday. It's still negative, but this measurement is turning up slightly, and our 10-day moving average it's still declined a little bit, but it's flattening out. Accumulation distribution is still more positive right now, and we're above the red moving average. Short term, we're well below the 20-period moving averages. We need to recapture that. And looking at our moving average study, we declined a little bit on the 20, 50, and 200-day moving averages. The big moving averages that we need to go back and get are the 200-day moving averages. We're still below that. You can see the difference between the simple and exponential is starting to widen out a bit. That's because the exponential calculates faster. So if price is going to advance from here, it'll need to recapture those 200-day moving averages. And that'll be a news event, and it'll be a technical alert if that happens. Or if we start to really fall down from here, you're going to see a continuation of these moving averages rolling over. Incidentally, right before I started recording, futures are down just a little bit, but virtually unchanged in overnight trading. Now, this is many hours before the market even opens, so lots of things can happen between now and then. The MACD is negative, but improving. And our STO, it's actually showing a little bit more strength with our short-term oscillators based on price and volume. The McClellan oscillator, it declined because prices declined, or the S&P declined. And so that's a little bit more negative. Our short-term oscillators, the Stochk RSI declined slightly, and the Williams %R also declined slightly, but is above 50 still. The force index also declined a bit on Monday, but is still green for right now. Intermediate term, we're well below the 50-period moving averages. The PMO showing some improvement, but still negative, also based on price and volume, the same thing. The other PMO study, those that are rising, declined a little bit on Monday, but those that are giving buy signals advanced slightly. Those that are above zero continues to be flat. This is another encouraging sign. We saw, and it's a little bit hard to see, but right where I'm circling is the bullish % index reading for Monday. That is bouncing currently. So there were some new point and figure buy signals generated on Monday. Moving average rainbow, we're trying to come up to the lower end of the rainbow as we see the top part of the rainbow continuing to roll over. The stochastics, short term declined a little bit. Intermediate term is positive. Longer term is turning up and is still slightly negative, but improving. The summation index continues. This is also potentially positive. It continues to fall based on price, but based on volume, it's turned up slightly. So that is a bit of a positive divergence. Then we're starting to see more of a mixed picture with our oscillators. Our shorter term oscillators are still negative. Our intermediate term oscillators are still negative to the MACD is showing some improvement. Our longer term oscillators continue to be more negative right now. We're losing the Pring bottom fisher, so we're just keeping an eye on this to see if things might change in that area. The vortex saw a decrease based on selling, flat to slightly higher based on buying power. The CCI after today, unless something big happens, I'm probably going to take this chart off. It continues to advance after giving an extreme negative reading. The Schond trend meter also, I may not show this because we were flat. Once we came up out of this negative reading, I don't really look at this. Oh, I look at it, but I don't start to talk about it until we get back up into the higher areas again, or if we go back down into the lower areas. CMF, it declined a little bit. That's the Chaikin money flow on Monday, but is still positive overall. As far as our different trading systems, the Elder system continues to be neutral with a blue bar. The SAR continues to be negative overall. Not enough has really happened for this to switch back positive. Our different charts, this is showing a pretty big improvement over Friday. It's picking up more of Thursday and Friday's bounce, and this is showing more of a clear candle, which is positive. The KEGI chart is still negative, but this red line is going up a little bit. If prices can advance from here, this might turn back to black, which would be more positive. The Renko chart really hasn't changed. It's still negative overall. The 3-line break, it does have a new white candle. That is a little bit more positive now. Equi volume, not really much happening here that's helpful. Point and figure, no new signals. The last signal that was drawn on here is a line pull reversal, which would be positive. This is the line that's coming down. Then we had the strong up days, which drew these X's. And so if this can continue, this would be a positive signal. The retracement, we're still bouncing between the 50% retracement and the 38.2 retracement level right now. Longer term, our arithmetic scale, as long as we're below the 200-day moving average, which we are, that's a weakening trend, but the line has not rolled over yet, and it'll take some time if that's what's going to happen. Here's the logarithmic chart as well. We are still below. These two charts are identical. It's just how they're plotted looks a little bit different. That's why I use them both, because you can sometimes see little different things if you see them in a little different way. The special K continues to be negative, and here's the longer term view of that as well. Broad market things that we look at, here's the S&P. We're back within kind of the middle to lower part of the range right now. Mid caps, kind of in the middle. Small caps, kind of near the upper end of the range. That was a little bit encouraging. We saw some strength in the small caps on Monday. FANG stocks had a good day. They were up 0.72%, but they still have a long ways to go if growth is going to come back and take over value again. ARK had a good day, up 3.91%. And then the Dow, it's also flirting around with the just below the new pivot level for the month of March, and still has a lot of work to do, but is not showing a real breakdown at this time. Small caps, this is a little more encouraging. Even though we're still treading sideways overall, we came right up to this resistance level and closed off of that. We were up 0.41% with the small caps. So that's a little more positive thing to dwell on. Mid caps were pretty much unchanged, but they're also dealing with this overhead resistance. The Nasdaq had a little bit more positive day. It was also up 0.41%, but is now slightly above the new pivot level for March, but we've crossed below as far as the moving averages. We're getting ready to cross with the Nasdaq 100, and we're right on the pivot right now, just a little bit above it. Looking at the Vixen, we saw a little bit of an advance with the Nasdaq 100, so we saw a bit of a decline with the Vixen, or the fear gauge on the Nasdaq 100. NYSE is still holding up okay, not great. We're still below the moving averages. We're at the pivot, but it's not showing a real breakdown, at least right now. Then comparing the the S&P 100 with the S&P 500, the 100 stocks, the more tech growth stocks, they outperformed the rest of the S&P on Monday. The Wilshire, which is also very broad-based, continues to be in that sideways trend and a little bit above the new pivot level. Internationally, China's having trouble. Pretty all these countries are rolling over based on the KST indicator. And then our all stocks declined slightly on Monday. Actually, it's down 0.7%. That's a little bit more than this chart would indicate. The dollar, it's hanging in there. It was up a little bit on Monday. Man, that's another thing. The Russian stock market didn't even open on Monday. They had been down 30% or something on Friday. The Russian ruble has lost something like 30% in value compared to the dollar. The Belarus ruble is about the same. So even though the dollar, it's a fiat currency and a lot of people are really critical of it, and then there's this debate about, are we going to switch over to a digital currency? That's all speculation right now. What we want to do is watch what's actually happening, and so far the dollar has been holding up. And then here's the start of the new weekly chart, where it is in a longer term uptrend. Oil, boy, back up almost to 96. We're at 95.72 right now. And that, which is interesting, because here we're supposed to have these sanctions against Russia, but because so many things were shut down in the US to try to do away with fossil fuels, well, all of our military equipment and all of our cars and everything, they still need oil. And so we have these sanctions against Russia, but we're still buying their oil. So yeah, it's one of those things that just doesn't seem to make a lot of sense. And gold, it had a pretty good day. It was up a little bit over 1%, but we're still at the upper end of this range. So we're watching to see, can we, now this is the ETF. I also look at the continuous futures contract for gold, and that's a little bit above 1900 now. But the one that I show and that I'm looking at right now is the GLD based on gold. If gold really starts to move, and silver for that matter, I'll probably start bringing in the futures contracts to look at. Silver was also up almost 1%, but we're still bouncing around in areas where we have been before, if you're looking at this on a trending basis. Bitcoin actually had a bit of a recovery. We're back into the 40s now. And as I looked right before I started recording, it's up into the 41s or so. So the breakdown that we thought it might have been getting ready to happen as we get to the lower 30s, that hasn't happened at least yet. As far as bonds, we're still seeing a real tightening phase with our 2-year, 10 to 2-year credit spread. This continues to decline. Even though interest rates were down in the longer term maturities, they were up in the shorter term maturities. Now, I've been pointing this out as far as the 10-year yield, where what had been resistance had become support. Well, we really broke down. Interest rates really declined on Monday, and we've now broken down below the 50% level on the Fibonacci, and we've now gone back down below what had been support turned resistance. Now we broke down below that. Then this is what I'm talking about. Here's the 30, 10, 5, and 2. we saw a real decrease in interest rates. And that probably helped the stock market to a degree, because lately, when interest rates go up, stocks go down and vice versa. Well, with interest rates declining on Monday, that probably gave some support over into the stock market. But you see the 3-month here, it ended up actually advancing on the day. Internationally, we've seen a bit of a decline across the board worldwide. And then the bond index that I look at every day, it was up a little bit, but we still have a lot to do if bonds are going to recapture any kind of an upward trend. Corporate bonds actually advanced a little bit on Monday, so we saw a little bit of a decline on their interest rate. We're at about 3.37% right now. And because this is a Fed chart and sometimes it's updated, but maybe not updated and blah, 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 be a little skeptical of this. I just don't have any other charts right now that are more real time that we can use to look at interest rates. Yeah, and this is just a longer term view. Yeah, we're going up overall, but we're still historically quite low. Relative studies, the one that I'm focusing on a daily basis is gold against the S&P. It declined. Actually, that's not right. This actually went up a little bit. It looks like it declined, but it was up 1.28%. But we're still trying to see, is this blue line going to cross above the red line? That would signal a potential change in trend. And then if price stays above the red line and goes higher, that might mean that gold has a chance of outperforming the S&P. So what are we looking for Tuesday? The S&P continues to be out of correction territory. As long as we stay 10% or lower, this is just a pullback. The market remains in that short-term range, and we're just in about the middle of that range. We still have earnings that are coming out. There's still the battle between value and growth. The economic reports on Tuesday, ISM manufacturing, construction spending, and then the final IHS market manufacturing PMI. Some of these could be a little influential, but the world seems to be focused on what's happening geopolitically right now, and that seems to be overriding more of what's going on in the markets right now. We do have Russia, Ukraine. The Iran meetings are still happening, but they're just debating back and forth. And I personally, I haven't been paying as much attention to what's happening in Canada right now, but that's also been in the news quite a bit as well. So our conclusion, the S&P continues to be negative and it's range bound, but could be improving. The short and intermediate term bias continues to be negative, but might be improving. And the long-term bias remains positive, but as long as we're below that 200-day moving average, that could be showing weakness and that the uptrend is fading. So please have a very happy and safe Tuesday, and I will look forward to talking to you again after Tuesday's session.